Chanos, famous shorter, capitulates to Elon and Tesla. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. We're in a drumbeat to the 21st, and we also have some trade consulting. If you'd like some help learning how to trade options and trading them, please drop us a note on our Facebook account, or if you're a Patreon member, we could communicate that way as well. So today, this week is an interesting one. Today is the 5th of December, 2020. We're in a countdown right now all the way to the 21st when Tesla enters the S&P, and we're still expecting a nice move in the stock price heading into that, even though we have not seen that yet. The question is sort of where have we been? And the answer is watching. We expected the stock to be up 50 to 100 points a day for this entire week, or for the weeks heading in. And this week was kind of a strange one. Elon came out with a negative comment on Tesla that resulted in a lot of people sort of stepping back and trying to evaluate whether or not his concern about costs being too high was a valid one that might introduce problems for Tesla. We then found that after we had a 3-day rule effect go on, where after there were no changes in the plan for the S&P, and we also found out that it would be an all at the same time move by the S&P, we actually think that there's definitely going to be a nice push in the stock price, possibly in the 100, maybe 150 point range between now and the 21st. It's just that it's not happening in sort of the gradual curve that we had expected. I was intrigued because Goldman Sachs came out with an upgrade of Tesla on Wednesday afternoon, and it kind of fit something we've been talking about a long time called the 3-day rule, where it takes about 3 days for analysts to sort of start to reevaluate what's going to happen, make a statement report, and then a large number of individuals and institutions can follow that report in terms of what they're doing. So as you notice, Tesla's stock price got even into the 540s and then finished out in the late 560s. And then all of a sudden the Goldman Sachs report came out and the stock kind of pushed up towards $600 a share again, given that Goldman had come out with a 775 target for the price of the stock. And again, we were kind of surprised that it took this long to get there. Now, our show focus today is on a guy named Jim Chanos. So Jim Chanos is what's called a hedge fund manager. He's what's called a short. There are certain managers who are given money to sort of bet against stocks, bet against the stock market. And the processes they use to get that done can include great research. It can also include introducing information that's negative about a company as a way to enhance the potential for that stock to drop. So in this case with Tesla, we've seen a lot of things that Mr. Chanos has said and done over the last few years that have been designed to sort of negatively impact Tesla's stock price, therefore giving him and his other short friends an opportunity to make great money. What you'll also notice is that as Tesla's stock price has risen, the short positions in the stock have continued to fall, meaning that there are a lot of these companies that are required to put their capital to work. And if they're going to do so, they'll do it on the short side. But the problem is the higher the stock price goes, the more expensive it is for them to unwind their position. So what I think is fun about investment management is certain people will make comments that are very small in number of words, but big in terms of impact. So Mr. Chanos' comment was that to date, as of April of this year, they were maximum short on Tesla, meaning that any fund is allowed to put no more than 5% of its capital into any position. In the case of Tesla, the folks at Mr. Chanos' firm had elected to stay on a short on Tesla even as the stock was rising. And through midsummer, when last we had an update, it seemed that they had decided to continue maintaining the short despite the fact that they were losing a lot of money. So his latest comment regarding the fact that Elon/Tesla has done a job well done for now, and the fact that they're reducing their position suggested that we truly are in a spot where Tesla's stock price is doing well, and it sort of confirms that we're likely headed nicely higher from here, which would have cost those hedge funds even more money than they've already lost in a fairly tight window. So I think the for now part of his comment suggests that, you know, we might get back into the short after the entry to the S&P because there likely will be a downdraft in the stock price there that we're not currently seeing because of the funds having to accumulate as we get in. Now, so I think this is a watershed moment. Rarely do you get a short to start unwinding positions, number one, and number two, admit that they may have been on the wrong side. I'm fascinated by this whole circumstance, and I really think it's worth studying because when you look at Tesla's balance sheet and some of the management challenges they had, Mr. Chanos seemed to be right in terms of you have a small company that's battling very big competitors that have the potential of running them over. And this sort of articulates one of the biggest challenges with investing, particularly investing against Silicon Valley. We have a lot of really smart people, they're well-resourced, and as they start to implement their business plans and companies, you'll find that oftentimes there will be capitulation by well-researched organizations like Mr. Chanos because they simply couldn't anticipate the variables that would impact the short and long term of those stocks, and therefore they end up losing a lot of money, which is what's happened here. So what I wanted to emphasize today or look at is the fact that there's, you know, we're expecting the stock price to do a lot better by now. I believe that if Elon hadn't made his comments, we would have been in a lot better position than we are, but you kind of flow with what you have. I would say that when you hear capitulations from shorts, it suggests the short position will get very narrow. So there just seems to be a declining number of entities that are against Tesla in the form of less shorts. There's also the challenge that lurks of what happens on the other side of that. So one of the most interesting pieces of data that we sort of came across this week is the fact that as Tesla gets larger, its position within the S&P gets larger. So there are more entities, funds that have to sell shares of other companies to buy Tesla in order to be in right balance as Tesla enters the S&P. So I believe what this should mean is that we end up with $50 to $80 billion worth of buying in theory has to occur. And I believe that's where Goldman is getting its $700 price target from. So is there a possibility this won't happen? There's no perfect data for, I think the perfect data, in fact, is what is the stock price doing? That kind of tells you what the market's position is on the stock in its current position. One of the challenges, though, is that very few organizations, entities, have enough information from different entities to be able to get a full picture and know exactly, for example, how many of the funds that are required to buy Tesla have enough shares now so they don't have to buy anymore. How many don't have enough shares, so therefore they do need to buy. So there are all these questions that are lurking out there. And so one can sort of perhaps have educated guesses on what's happening, but in general, very few individuals, entities have that exact answer or anything close to it. And everybody kind of watches them to see what they do to determine how they should invest. And the Goldman announcement this week, I think, sort of fits the parameters of that. The only problem I see with the Goldman announcement is that usually when you have the 3-day rule and you have at least 2 or 3 analysts line up along a certain price target for a stock, that tends to move the stock dramatically. So I watch Tesla aggressively 5 days a week, 7 days a week almost. And it was interesting this week because there's a concept called a pin. So if you already know what this is, skip 4 minutes ahead. So what we anticipated and talked about with our Patreon supporters is that at 600, at 700, at 650, there are all these numbers that are really important. And what happens is many people who buy or sell puts and calls do so right on that zero. In the case of this week, there were about 15,000 calls and approximately 5,000 puts. That's not an exact number, but basically 3 times more calls at 600 than there were puts. So the anticipation we had was for this Friday, there was no way that the stock was going over 600 because the market makers could make a lot of money making sure people's options expired worthless. So basically what we had happen is exactly that. The stock stayed below 600 on Friday, December 4th. And it's interesting to note that as soon as the market was closed and all those options ended up worthless, the stock now went over 600 in the after hours. And it seems to be sort of gathering steam right here for a nice run next week. Again, the usual MO of Tesla recently has been very strong Mondays and Tuesdays when it's not being pinned by market makers. And as we get into Wednesday, it will slow down and then be a subject to a pin on Friday, typically towards the big number. So a week and a half ago, it was pinned below 500. This week, it was pinned below 600. And I believe next week, we should be pinned below 700 if we get the run that we're anticipating heading into that period. I think that the other thing that's going on right now is for funds that are being advised by analysts, I think next week is a real pivotal one because once you get into 3-day rules, you have all the analysts have written their report, handed them out, and helped in the process of how trading will occur for those stocks. What I expect to have happen is that the large funds will simply take time to sort of dollar cost average, where particularly in the first hour and a half and the last hour, half of the day, they'll start making large purchases to try to get to the appropriate allocations required by the S&P. One of the fun data points here, though, is that as we've talked about, the bigger the market cap, the more shares those funds have to buy. So it'll be interesting to see as the stock price rises if it doesn't cause its own self to rise because its weighting and allocation within the S&P will force there to be a continued sort of increased buying based on the increased market share or market cap of the company. So I think that we're in a good spot right now. I think that what's available is perhaps another 100, 150 points theoretically before we enter the S&P. We've been slow on our extra shows because you really want to see more data to support making more statements and therefore, to try to figure things out. One of the data point that popped up that I read about this morning, Saturday, is that there's this interesting phenomenon, which is in Germany, registrations of electric vehicles is at 93,000, but registrations in California were at 63,000. And so I thought it was an interesting data comparison because they didn't consider the entire United States. They just focused on California in those calculations, which I thought was very strange. But it's a good thing to see Germany sort of ordering and buying that many cars. We have a show coming up today, possibly tomorrow, where we call it, I call it parking lot pimping, but the general concept is that there's something called channel checks. So analysts will go to if you're a McDonald's analyst, you analyze McDonald's, you eat their burgers and see what you think. If you're Tesla, we actually have a new sort of category on our playlist that I'd like to invite you to check out, and it's called Channel Check Tyson's Corner. And what this is, the goal of this is that we have videos. So we've been visiting the Tesla facility here in Virginia at Tyson's Corner pretty much once a month, sometimes more if we're heading into earnings. And one of the so we have data, and the data is what do you see on the ground in terms of vehicles sitting there. Now the question is, what do you do with that data? Because the company spread throughout the world, and we're looking at one location, and we can see the number of repair vehicles, the number of new vehicles that are on the ground, what's inbound, et cetera. There's all this data that's there. The problem with that data is, well, it's nice that you know what's going on in Tyson's Corner, but what's happening in China, what's happening in Europe? And so our next show kind of focuses on showing you video of 3 different times of the same area so you can get a feel for what's going on. One of the things that I'm very pleased, impressed by is I was kind of worried about how China not allowing the Model Ys to be produced at scale would affect the production and sales numbers for the quarter. And it turns out that we went to visit our facility, and you'll see the video. After you see how little inventory there is for Tesla right now, I would say that you'll be really pleased with how the quarter is setting up, and that's pretty exciting. So I encourage you to check out our channel check. We basically have half the vehicles that we usually see on the ground, and we also would love it if you're living in someplace around the world. Just take a photo and maybe private message it to us on our Facebook so we can post that. That way we can show images of what lots look like around the globe, so folks who are investors can get a better sense for how sales are going for Tesla currently. At any rate, I would say that where we are right now is the numbers for Tesla are very solid, and in terms of sales, I'd have to say I'm a little nervous about getting past the 500,000 production this year, given that we don't have the Model Y going yet in China. But I think we understand why they're slowing the delivery of that vehicle. And I still think that the Chinese government has a lot of incentive to delay Model Y beyond the initial January production start that was listed, because there are a lot of places like NIO and XPeng and others that are starting to get traction. And if Tesla comes in and wipes them out, it's a big problem for those companies in the future. So we wanted to, thank you for taking time out to join us. Please remember to like and subscribe. I think we get 100 points on Tesla in the next 5 to 7 trading days heading to the 21st. And I hope you're able to make some good money on it. We do have some trade consulting if you'd like some help in trading options, which have a lot more amplified gain in value in time. And so we'd be happy to assist you with that. Our next segment is our usual health tips. I finally got a new pair of leg weights, and I'm doing my daily 25 leg lifts a day on each leg with an ankle weight on. It strengthens the quad muscles, reducing issues with your knees and potential operations. The second item is, don't forget, don't go to bed within 4 hours of eating to let the food digest, minimum 2 hours, recommended by an expert at the University of Louisville for upper respiratory cancer, in which he shared with us that many people are getting very busy now and are choosing to eat and go to bed quickly, and that digestive acid rolls up into your upper respiratory area and causes indigestion and other things, and potentially causes cancer. He also shared with us that a lot of people think that antacids or things that mask the pain of that are effective, and that's exactly what he pointed out to us. It feels good, but it's masking the damage that's actually being done. So you might want to be mindful of that as you take those reduced pain methods. Also, don't forget no more than once a week for fried foods, reducing the chance of type 2 diabetes or other issues related to how our bodies deal with new substances like fried foods. Also wanted to encourage you to consider a 30 SPF or better in a sunny situation particularly. And obviously exercise is a great idea to consider. Lastly, 60% of the 200 doctors we surveyed were doing some kind of fasting diet. I think the least painful there's the 5-2 diet, the least painful that I came across was one doctor who suggested that only eat on half the calendar. So in a 24-hour band, only eat on 12-hour half of that. And so that might be something to consider. as a sort of fasting method for better health. At any rate, I wanted to thank you for taking time to join us. This is Greg for Teslafaninsight. Tschüss German, au revoir French, lehit road Hebrew, choda hafez Farsi, hey do Swedish, assalamu alaikum, Muslim, ni hao ma, hello in Chinese, trazviche, hello in Russian, namaste, Hindi, India, and some of you have sent some other mahalo, for example, in Hawaiian. I hope it's not a curse word I get in trouble for. I looked it up and it's okay. And in Jamaica, we say, enough respect, walk good man. Thanks for joining us. Please, we'd love to have constructive comments at the bottom of our show. If you choose to go crazy, you get blocked or deleted. So we'd appreciate constructive comments. And I really think this is a watershed moment to have Mr. Chanos capitulate, because it suggests that the shorts are giving up on Tesla, which I think demonstrates nice upside coming. Have a great day. Bye for now. And thanks once again for joining us.